Been a rough few weeks for the stock market, right? And your 401k if you've been looking at it. Fears of a recession, inflation are mounting, tariffs are causing some concerns as well. It's always good to look at the long term though, and even though last week the Dow Jones lost about 600 points, the S&P down 137 points, over the past year, the S&P 500 is still up about 337 points, a good percentage, and the Dow more than 2,000 points. So those will be solid returns for the year. So 12 News journalist Tricia Hennis reports on investing strategies in this ever-changing economy.
Right now, you're getting a lot of calls from people asking about the stock market. Why is it volatile?
But I think what we're seeing right now in the last month or so is sort of a tariff tantrum where the markets aren't exactly sure how they should react to tariffs. They don't know who's going to get one, how long they're going to last, how much they might be. So combine that with some issues in tech stocks where AI is not exactly returned what we were hoping for. The new administration, all of these changes kind of lumped together create some uncertainty out there.
Financial advisor Shane Stevenson with Winston & Company's Retirement and Financial Services says a big part of his job is to reassure people.
To kind of bring some regularity back into the conversation and say, okay, things are not as crazy as they may seem.
He says even while we've seen the stock market drop over the past week, over the past year, the S&P 500 is still up.
We want to make sure that we're not in freaked out mode. We don't make any rash decisions.
Going to cash right now is not what he advises.
Time in the market is way more important than timing the market.
Shane says if you miss the upswing, which usually happens right after the downswing, your portfolio may never recover from those misses. What should we be paying attention to over the next few months?
We want to look at what happens with interest rates. Federal Reserve dropped rates a little bit in 2024. We're expecting just a little bit more here in 2025. Probably no more than about 0.75% throughout 2025.
He says you should also watch consumer price index data.
February 2025 numbers said that inflation was still trickling upwards just barely. So as that continues to cool, that should also help the markets.
Finally, what can investors do to manage their risk during volatile times?
The goal of investing is usually to buy low and sell high. So if you sell right now while things are maybe a little bit depressed or a little bit low, you're going to lock in a loss for yourself. And if things then come roaring back, you're going to not necessarily be in the market and you'll miss that upswing.
Shane says it's best to pick an investment strategy that brings consistency, like dollar cost averaging.
That allows you to buy in at a set amount every single month and use averages to your advantage.
And make sure to diversify your investment strategy. Have more than just stocks, bonds, and mutual funds.
Real estate or annuities or other aspects that can give you some protection against market risk.
And finally, work with the pro. Investing can be intimidating.
Help you make sure that for the given amount of risk that you're taking in your portfolio, you're getting as much return back on that money as you possibly can.
In Phoenix, Tricia Hendricks, 12 News.
Yeah, I like what he said there. Time in the market better than timing the market. Something to think about.